Mohit, hi, good to have you with us. How have you been?
Hey, hey, Ashu, thank you so much for calling me here. I've been a total fan of all the sessions that you've been doing on YouTube. I always thought that I'm going to be a misfit here, so I'm just glad that you called me.
No, listen, I'm particularly excited about this session, right? I mean, I say this often, right? Because I think everybody I've had the opportunity of knowing, right? I think you can connect with certain people on an intellectual level, right? And I think that just brings in a very genuine sense of excitement, right? When you are getting into a conversation, right? Which now the world will be able to listen to, right? And I think I'm particularly excited about this one, largely because while you've been an investor in the early stage market, right? You also had a substantial amount of experience in the secondary markets, right? Which
That's
brings
right.
in a very different kind of a sensibility and an understanding, right? Because you've seen consumption, you've seen profitability, you've seen organizations being built and designed in a certain form and way, right? And there is a certain sense of responsibility, right, when you talk about stakeholder value creation, so on and so forth, right? And I think with what we see in the early stage market, it's these are two complete opposites, right? And I think that just makes me so much more excited about the conversation that we're going to have today, right? And of course, and the discussion that we're going to have on your portfolio, right? But I think it's an exciting discussion that I'm looking forward to, right? Before we jump into that, Mohit, it'll be lovely to have us understand your background. You've been there for a reasonable amount of time. You operated, like I said, in the secondary markets, and there's been a professional journey before created ITI, right? So take us through that, and then we dive into the session today.
Awesome. So yeah, I mean, I did. So basically, I have a very funny story, right? Unlike most of your guests who are IIT and IIM pass outs, I'm neither of the two. I'm a regular average Joe, backbencher of my engineering class. I did, however, pass my engineering in 4 years, unlike a lot of people in my class who didn't.
Right.
So Pune University pass out, you know, totally clueless in life. Parents were doctors, so they said,
Right.
"Doctor ban ja beta." I said, "वो तो नहीं बन सकते." So then they said, "Okay, the next best thing to doctor is engineering. Just please,
Right.
can you do this course in 4 years?"
Right.
So while doing it, somewhere I was trying to just sort of identify where do I fit, what is my life going to be taking me to. And I was
Right.
very smitten by the world of finance and by the world of hedge funds. The word
Right.
hedge fund really sort of struck a chord in my life.
Right.
So in my second year of engineering, I was just sort of fascinated and mesmerized by the word hedge fund. So I just sort of
Right.
wanted to work at one.
Right.
So and then I realized that in India there were no hedge funds, and even today, right, because of our taxation, there
Yeah.
are no hedge funds here. So Singapore and Hong Kong seem to be where most of the hedge funds were.
Right.
And I kid you not, I basically, there was no LinkedIn back then. There was just Google, right?
Right.
I stalked the shit out of some 250 hedge funds and just
Right.
sent out cold letters, not even emails, because you couldn't
Right.
find the email address. So I had their addresses because every hedge fund had a mandate to write their address on their website.
Right.
I send out letters to Singapore hedge funds. Please, can you give me
Right.
an internship? Right. I'm this engineering kid working from India.
Right.
I code. I do things on Apple devices which others can't, and all that jazz. And funnily, a lot of them actually reverted back. The good part is people actually reverted back and said, okay,
Right.
you seem like a young bright kid, but we're not hiring at the moment or whatever.
Right.
And there's this one fund which was a Tiger Global Cub. A Tiger Global Cub is basically where Tiger gives them initial seed
Right.
capital.
Right.
So this was Kelusa Capital, $1 billion in AUM, and
Right.
they wrote back and said, okay, we are ready to give you an internship, but it's going to be an unpaid internship. You'll have to bear your own cost of
Right.
living, stay, and everything else. But you'll get 2 months in Singapore and you'll get about 8, 9 months in India. I said
Right.
done.
Right.
Engineering any which way was not really fascinating me. So
Right.
and engineering, you have to study 1 week before the exam. You pass.
Right.
Because anyway, you're
Right.
learning like shit, which is dated 10 years before the current time.
Right.
That still is the
Yeah.
still is the problem with engineering, right?
Right.
So started at Kelusa Capital, researching Asia technology stocks
Right.
along with the analysts there. Great insights. This was at the peak of the last bull cycle. So
Right.
2007 is when I started, early 2007. So the
Interesting.
world seemed like, oh my God, every stock goes up. It's very similar to what it is right now. Okay,
Right.
everything was hunky dory. Everyone's like super bullish about life, about
Right.
just the prospects of the world.
Right.
And suddenly, so we're looking at some tech stocks like Sony and HTC, and the
Right.
numbers didn't add up. And this fund had a thesis about creating short strategies on these companies.
Mm-hmm.
And I'm like, in a tech world like this, where everything is sort of, moving at such lightning pace, why are we creating short thesis?
Right.
And the fund manager there was just he was extremely smart. He's like, listen,
Right.
shit's going to hit the roof and tech is going to melt.
Right.
Let's find short thesis.
Right.
And on Indian auto, he had like this negative thesis which was coming out. So I actually went, when I came back to India, I was going from dealer to dealer across the length and breadth of the country, evaluating how auto sales were moving in 2008, 2009.
Wow.
Of course, shit hit the roof. The world sort of melted after that. The fund definitely lost AUM, but that was more of, redemptions, but they didn't really lose capital as such. And then sort of came the rebuilding at 2009 when, they were like, okay, auto might actually just be the first one to bounce back, and FMCG. So do a little more on ground work there. So did that. I actually thought that I'll get like a full-time job there, but that didn't happen because the fund size had reduced drastically. And that's where I got my first learning lesson in life, right? RJ at that time told me that, listen, Mohit, a hedge fund is where you sort of, graduate up to. You don't start your career here, because if you start it here, then there is just no going. There's no going up from here, right? It's the epitome of where you can reach in financial money management. But you need to learn a lot more. You need to understand equity research. You're not a commerce guy. You don't understand balance sheet and cash flow. So why don't you work at a domestic broking house in your own country? So that's how I started my institutional journey, where I was doing institutional equity research for about 18 months, followed by institutional equity sales for about 18 months. Did a lot of thorough granular level understanding of FMCG stocks, of capital goods stocks, then marketed these companies, did IPOs for companies in my stint from 2010 to 2012. And while doing the IPOs, in institutional equity sales, I realized that there was a fundamental problem in the way, the market was at that time with regards to the good kept on getting bigger and better, while the middle to small just kept on falling off because of corporate governance issues, because of legacy issues. So I was of the fundamental belief that the next leg of companies which list in India or anywhere in the world should have better corporate governance, should have better matrices, and they should, like, when is the next HDFC bank going to be created, or when is the next ETF going to be created, right? Which is what tempted me to sort of leave the markets in 2012 and move to, angel investing at that time. And with the simple ethos that invest in businesses and build them with the right ethos from day zero. And if you do that, then you'll potentially any which way get to the right listing. What deeply saddens me today is that we are still back in 2012. The same shit is now amplified by 15 times and it comes listed. I mean, the audacity that people have to list, businesses which have hyper competition, which have no path to profitability. And unfortunately, because the world is so liquid and FD rates are at 4.5%, people don't know what to do with their money. These IPOs get subscribed to. So, yeah.
I think, more I understand where you're coming from, right? And I understand that I understand some of the key aspects that you highlighted, right? But I think also the fact, and I think I'm moving more towards macro, right? Before we're getting down to discussing, ITI Growth Opportunities Fund and, the structure that you have there and their priority areas. But, what is essentially happening is that, COVID has been a very unreal time, right? And this is something that I've been discussing with many people across work spectrums, right? With investors, with professionals, with change agents, right? Who are evangelizing this entire change. I think one thing which has happened, right? And I kind of understand where you're coming from, right? In a 2020 perspective, things was possibly a little more different because, we were operating in silos, right? Cut to 2020, the environment has become a little more predictable. I think we've realized as a country, the essence and necessity of being technology driven and also to a certain extent dependent, right? There's a huge form of transformation, kind of taking place, right? Where organizations are becoming more efficient. Consumers are now essentially converging online, right? But there's a certain predictability and, there is a certain influence which is getting built, right? And I think that the entire piece is kind of coming together, right? In a certain sense and way. And this is possibly the first step in that process, right? I think come 2-3 years, will possibly a very different looking economy, right? Which is going to be, like I said, so much more predictable, which is going to be exactly like, how homogeneous market works, right? What are your thoughts about that, right? I mean, do you agree with a narrative which is like this? I mean, this is my narrative and of course what's kind of going around, right? But do you agree with this kind of a narrative, or do you think there are missing gaps that are still there, which, possibly can lead into, unexpected losses, unanticipated losses, right? When we are passing on a risk of, say, an under, not a profitable asset, going into public markets, right? Are we risking that entire equation? What's your sense of it?
No, I think your narrative is bang on for 120 million Indians. The problem is that this country is 1.3 billion, right? So you missed out 1.1 billion people.
Right.
And that is where the where the bigger problem stands, right? A bulk of this country. So, okay, firstly, as much as I love to sort of be a backer of tech, I love to consume tech myself across all verticals. But the fundamental thing that we need to sort of accept is the fact that our tech penetration and absorption of internet across the next leg of Indians has slowed down drastically. Our cellular growth rates are slowing down. Jio has this massive problem of dummy SIM cards and shadow SIMs which are floating around. So their real numbers really no one knows. And the next 400 million people are not really coming online and doing things the way we want them to do. And that is, you cannot change the fundamental nature of people within a few months. Yes, there is a pandemic, but today's Bakri Eid. Step out of your house and you'll see that there is a full-fledged festive shopping happening in every city in this country. Can you tell a Muslim family to buy a goat online? I don't think that's going to happen. Right? I'm sorry, this is a very crude, sort of rudimentary example that I'm giving. Right? Maybe they might still buy the biryani on Zomato, but the fundamental problem here is that the way so a lot of solutions are out there, and people think that everyone has got that problem, so those solutions are going to be expanded further. The truth of the matter is that yes, they have adoption to a particular point, and beyond which every economy, not just India, right? Every economy around the world has seen a plateau, then seen a slight dip, and then sort of moved up. We are just in the up phase right now. We still have to see the plateauing. We've just started the plateauing process, and then we'll see the downslip. Right. So in the midst of this pandemic, when people were sitting at home, right, you had no option but to use technology to order groceries, to order food. Despite that, if you were not bottom line profitable, despite that, if your AOVs didn't move up, despite that you didn't have the highest revenue of your life, then there's a fundamental problem. Right. You look at numbers from Domino's, their numbers are incredible. The last 1 year has been phenomenal for them. Because they were delivering, they were prepared for this. They had their own tech platform, they had their riders on standby. Domino's were delivering throughout the lockdown, and they actually had great numbers to showcase. How is it that, and unfortunately we don't have access to Swiggy numbers, but I will not be surprised if Swiggy has beaten the incumbent who's getting listed today. So we will go see. If it's about how much of a call are you taking on COVID? Is COVID a pandemic or is COVID an endemic? If it's an endemic, we will all learn to live with it, and eventually we'll all start stepping back to our regular lives. Some bit of this tech consumption will of course remain. There is a decent amount of stickiness, but you ask a 1-year-old kid or ask a first standard kid, are you happy to only do Zoom lessons all your life, or do you want to go back to school? I mean, he's of course going to say he wants to go to school. I have a niece of mine in Nasik who makes my sister and brother-in-law go to her school every day just to see it from outside, because she went on the day of admission in March last year, and she misses going there. She's like, "मैं ये Zoom पे क्यों कर रही हूँ?"
No, I know what you mean. Yes, I think this is a very important. There's a very important point that you're highlighting, Mohit. I think which is that as we get to normal, there's a huge tracing back which is going to happen, right? And I kind of understand where you're coming from, right? There could be an early exuberance, and I think. And I understand where you're coming from. I think possibly the market is, buying in it a little too much, right? And I personally have that concern, right? What happens when we get back to normal, right? A lot of spends that we've done, is this capacity that we've created, right? Is this going to get kind of consumed to the hilt to 100%, or will it trace back to say a 30, 40, 50%, right? And we sort of coexist with it, which would also mean that the revenues or the possibilities of revenues might shrink as we go along. I think this is a very interesting point, right? And I would love to sort of continue talking more about this point. But before we do that, I am going to jump into talking more about ITI, right? Which is your vehicle where you're investing in early stage startups. You have a great portfolio. You've also been an angel investor. Tell me a little more about that, Mohit. What are some of the investments that you've made in the personal capacity, and what is the fund construct? What are the key areas? What are some of the things that you're looking at? I think it'll be lovely to know that.
Sure, awesome. So again, going back to 2012 when I quit listed markets, right? Typically what happens is when people move out of listed markets, they think that they can do investment banking. It's the easiest thing to do, right? Because money managers on one side, and people who want money on one side, and make a 2.5% commission, you're good to go. So हम भी उसी तरह निकले थे investment banking करने. luck ऐसा है कि on the fourth or fifth day of setting up this small office in Nariman Point,
Right.
which by the way coincidentally later on I came to know was Ketan Parekh's ex-office. So it has its own share of good and bad attached to it.
Right.
On the fifth day of setting up office, we have these four men and one woman,
Right.
senior people walking out, coming to our office and saying that we've quit our jobs at Blue Dart and
Right.
we want to set up a e-commerce dedicated logistics business. And can you help us raise $1.2 million in it?
Right. Right.
And the first question you ask is like, you guys are old. Why are you quitting such a nice cushy job with 35 years of experience each one of you has?
Right.
And why does e-commerce require a new logistics vehicle, right? Can't Blue Dart do it, or can't Gati, or can't DTDC, or DHL and FedEx and all these guys do it?
Right.
And Krishnan is like, Mohit, I'm the one who coined the word cash on delivery. Right? I'm the one who started cash on delivery in India.
Wow.
I know this beast. I've headed e-commerce for the last 6-7 years. I've seen Bazi.com, I've seen Fetish.com, Fashion and You, Fashionara.com, and all those other .coms which are not even existing today. And trust me, this is a different beast. It's very small today. Funny part is at that time, India's e-commerce, total yearly e-commerce was like 2.5 billion.
Right.
And these guys came and met me, I think, met us in October first week and November 11th. So that's 11/11 sale, which is the Singles Day sale in China.
Right.
2012 ki baat kar raha hu. China did 6.5 billion of GMV from Alibaba alone on just that one day.
Right.
And I said, there is some sort of a mismatch here. If China is doing it in one day, what India doesn't do in a full year, either China needs to slow down or India needs to catch up.
Right. Interesting.
And that gave, so I did a lot of deep dive into it. Now, Krishna and the team were very good at understanding dhanda. They knew business better than, like they knew how to move parcels from point A to point B in unit time. Sanjeev, and I'm sorry, I have to sort of mention this. Sanjeev, who was the backbone of Ecom Express, he headed IPL logistics, so he knew how to move people and team together. Unfortunately, we lost Sanjeev last year, which was a very painful moment for all of us.
Very unfortunate.
But Sanjeev, between Sanjeev's knowledge of understanding core business, between Krishnan's imagination of how to build the business, and this whole team, right? They didn't understand tech, which is fine. They didn't have a great fancy investment memorandum to build. I did all of that for them. I built the first financial model for Ecom Express, and I said, okay, somewhere while doing all of that exercise for 2.5 months, remember this was the investment banking mandate for me, right? So I was the investment banker back then. Somewhere I was like, hey boss, this is more than just investment banking. I mean, these guys are fab. I need to put my money in this. Now, here comes my middle class mentality, right? Because I don't come from a family of loaded parents, right? I don't have a business family. So जो थोड़ा बहुत कमाया था, 3 साल of नौकरी में, वो सारा डाल दिया Ecom Express में. Now, see, at age 24, that is the liberty that you have, right? Because you have no आगे पीछे, nothing to worry about. So you're like, हाँ ठीक है, let's just put the money, right? And so I put that small money in Ecom Express, and they grew. They grew like there's no tomorrow. If I'm not mistaken, today is 21st July, right?
Yeah.
Exactly 7 years from this date, on the same date, Sanjeev and I set up operations in Pune, and we were cutting the ribbon at about the same time. That is the sort of journey that I had with Ecom Express, which is building with them hand in hand. And that's what I enjoyed. That see, for me, my money was riding on it, right? So it's not. I was not I didn't know what the angel investment is. I just knew that my money is in this company, so I need to help this company grow. And if I do that, I will make my money back. Right. So built Ecom Express with these guys. Series A, People Capital. Series B, Warburg Pincus. Then CDC, Partners Group. Blah blah blah. Today, Ecom is almost on the verge of being a unicorn. I've of course exited in the middle. Coming back from listed market, I was very clear: don't get married to companies. When you have a liquidity event, get out. And that's very important, right? In our world, liquidity events come and you should take them. Don't sort of get emotionally attached to businesses. So did Ecom Express, took the learnings and earnings from that, did Grab, again build that bottom up on the board, doubled down as a secondary investor again, sold that to Reliance. So I think, kept on building, Wixo, Tarusa, a bunch of these, Humor Me, a bunch of these amazing startup entrepreneurs. Made mistakes also, bought into localbania.com, which could have been the growers of the...
I think it was a little too early for its time. I think it was a little too early.
It was too early. It was too early. And again, because I worked with Karan on ground, right, I realized that Indian consumer, at least in 2014, was not very forgiving when it came to e-commerce of
Right.
grocery.
Right.
So if your wife is making you red sauce pasta and she orders 10 things on local banya,
Right.
she will want all 10 to come.
Right.
And if I give 9, she's unhappy. If I give
Absolutely.
all 10 and I give like 2 rotten tomatoes, she will go and tell the whole building, सबसे घटिया platform है. कभी
Right.
मत order करना यहाँ से.
Right.
Right? There was just zero tolerance.
I know.
Today, there's a lot more tolerance. People are more aware of the fact that, okay, yes, we are ordering so many things. They can
Right.
goof up a few things and we'll get our refund.
Right.
But back then, it was tough.
It
But
was
yeah, I mean, they still scaled up.
right.
At a point of time, they were doing 20,000 orders a day in Bombay
Right.
alone,
Wow.
which is a tough geography. But yeah, I mean, so did a bunch of these businesses. For
Right.
me, the local banya liquidation day was a sort of life-turning event because just seeing an entrepreneur's dreams crash, and
Yeah.
we both knew it that this was the right space to be in.
Right.
We knew that we could build a billion-dollar business here.
Right.
But because of lack of capital, because of a convoluted structure by a very large media entity who owned 50%,
Right.
and a bunch of other things. Sorry, I'm not going to give out their names.
No, I understand where you're coming from. I understand where you're coming from. I completely
Right?
understand. Yeah, that's absolutely
You
right.
know that you were in the right space, but
Right.
just your timing got it wrong.
Right.
And seeing, that day when we liquidated 50, 60 lakh worth of FMCG inventory from their warehouse,
Right.
it just broke my heart. I said, never in my life do I want to be part of a liquidation. Never in my life do I want to see entrepreneurial dreams being crashing down.
Right.
And that's when I realized that I don't want to be invested in businesses which burn absurd amount of money
Right.
and have no paths to revenue generation or EBITDA generation.
Mhm.
So that is really the core thesis of a lot of what we do today in the fund.
Right.
When I moved to the institutional side, when I decided to sort of create a fund,
Right.
that is really the core underlying. That yes, we will do early stage. Yes, we will bet on businesses which are unproven, but they will have a path to profitability. They will have a
Right.
path to revenue generation.
Very
And
good.
when you do that, you automatically will have investors who will flock by you. So
Right.
I don't really spend too much time, sort of cozying up with all my peers, right? I
Right.
don't need to because my portfolio does it for me,
Right.
right? Today, RevOS is a Series A, $35 million company. I mean, I came in at 1.2. I didn't even have to call anybody. वो अपने
Right.
ऑर्गेनिक स्ट्रेंथ पे ग्रो किया ना.
Right.
ई-कॉमर्स में भी सेम चीज हुआ था, ग्रैब में भी सेम चीज हुआ था, हर जगह पे सेम होता है.
Interesting.
So if you are building businesses the right way,
Right.
as an investor, your job is to get in capital and to bring in your connects and be
Right.
able to help them scale up their business.
Right.
We are extremely proud of the fact that we have some of the best connects in this industry.
Right.
B2B, B2G, B2G
Right.
particularly. Right?
Right.
That is where I specialize. So I've helped 1MG with the 1940 Drug and Cosmetic Act.
Right.
With Red Wing, we're working on the drone policy for allowing drones for medical delivery of drugs.
Right.
So as things stand on the fund, we've done 10 investments so far. We are adding 4 more in the next two odd months.
Right.
And yeah, it's been great. Yeah, we've been growing slowly, just keeping our heads down, not too much media, just building. That's what we do.
Very, very interesting, Mohit. And I think I understand where you're coming from, right? And I think I understand the pain that you've sort of been through, right? I think because you did not possibly approach it like a conventional, in a like a typical investor, right? In a very clinical way. I think the way you possibly got into it was more because knew the founder, you were possibly too close to them building it up, and I think that brings in a very different kind of an attachment, right? And I think then over a period, like you kind of mentioned, right, there's a liquidation event which sort of happened, right? It breaks you in a certain way, and it also matures you in a certain way, right? And it just
Yep.
prepares you to look at it in a very, very very clinical way, right, as an opportunity, right? And I think really just dissect it. Mohit, one question that I have, right, is that I understand where you're coming from, right, which is companies with profitable and so on and so forth, right? I think that is a narrative that is there. So there are two narratives which are going around, right? One is where organizations and startups go on to build a massive amount of engagement, right? And engagement becomes a primary currency. Eventually, that is sort of extrapolated in a certain way for it to and modeled in a certain way where it'll give you a reflection of how the consumer is going to behave at a certain point at scale, right, and how it's going to translate into revenues, right, and so on and so forth, right. That's one way to look at it, which is not necessarily bad. And then the other way to look at it is that at a unit economics level, this is something which gives you a reasonable reflection, right. You have your cohorts which are in place. There's a repeat which is happening and stuff like that, right. Which is the mechanics which you think is better, right, or you would prefer while you investing in companies, right? And you would want to see moving and there's consistency and predictability and all that, right? Which is the metrics that you would choose when you're making these investments?
No, I think, by definition of early stage or just by definition of being invested in tech businesses, right? There is no one size fits all, right? You have to look at every business with a different lens. You cannot, I mean, you have to basically unlearn everything that you know of. So
Right.
all of us have our individual biases, right? So I'm very clear that, and this is again, I learned it on the way. Somebody sort of gave me this beautiful piece of advice. He said, Mohit, you can either be the guy who wins arguments in a room, or you be the guy who makes money. You choose which one you want to be,
Right.
right? So that's when I realized that, okay, boss, this, my bias or my argument on a particular space doesn't
Right.
necessarily mean translate into me making money. So I'm in the business of making money, not just
Right.
for myself, but for all my LPs, all my investors who are there.
All the stakeholders, yes. Yeah.
So my biases don't matter, right?
Right.
I unlearn everything that I know of every time I speak to a to a
Right.
new company,
Right.
right? I'm always open to sort of figuring out newer mechanisms. I only try to bring in some of my past experiences to them and see if it makes sense. If it doesn't
Right.
make sense, it doesn't make sense, right?
Right.
So I don't. I mean, if there is, there are some businesses where you have repeat customers, which are a great matrix to look
Right.
at. There are some. So like we are invested in a content business called
Right.
Hubhopper,
Right.
right? Which is one of the largest podcasting companies in the country today.
Right.
Hubhopper, has like a DAO of 1.2 million, a
Right.
MAU of about 6.77 odd million,
Right.
with an average time spent of 28 minutes by each customer on the platform.
Right.
Now, these are incredible numbers in terms of engagement.
Right.
Their ad revenue is like 10 lakh rupees for the
Mm-hmm.
month,
Right.
right? So it's not very great, but in the podcasting world, any which way, ad revenues are still very nascent.
Right.
Clubhouse has only come and validated the fact that yes, audio is a great medium to communicate. Audio is a great, like, simple thing I tell people. Tell me what happened in Game of Thrones season 5 episode 6. You have no clue. You have no
Right.
clue because video is consumed in a way where you're just sort of in your brain enjoying it at that moment, and then you sort of move on. But if I tell you, if I start humming a song from Dil To Pagal Hai, which is I think 1993 or 1994, there's a very high chance that you actually finish that song for me, because
Right.
somewhere that song is stuck in your mind, because
Right.
audio just sort of has a great repeatability inside.
Right.
With Hubhopper, it's very clear that you will have ad revenues coming in when people understand the space.
Right.
Till then, just keep building engagement.
Right.
We are not looking at if the monthly ad revenues are great or not. That doesn't matter.
Right.
So I think there is no one size fits all. Just to sort of come back to your question,
Sure.
open to sort of tinkering around our biases, tinkering around our learnings, as long
Right.
as businesses are there to sustain,
Right.
right? You shouldn't fall off a cliff. So
Right.
if your business is going to, take a longer time to reach profitability, or your path to revenues seems longer,
Right.
don't overstaff yourself, right? Find a better
Interesting.
growth hack to build,
Right.
so that you're at least well capitalized for 2 years or 3 years.
Right.
And COVID taught that, right? So many businesses
Right.
which sort of just fell off the cliff because they were overstaffed.
Right. But I think what got seen was a massive surge in liquidity, right? I think who would have thought that COVID could bring in the kind of kind of focus, right? And participation, right? I mean, who could have thought of that? I mean, how do you view that as a I mean, do you see it as an aberration, or do you think that given this transformation is going to happen, and that the consumer is going to, like I said, the consumer is going to become a little more predictable, right? Because everybody was essentially housed in the same quarter, right? And they were consuming of just about 4 or 5 screens, right? It just brought in, you could now predict influence, right? And you could kind of sense that there's this consumption which could be predictable, right? And that brought in a huge surge, right? I mean, how do you see it? I mean, do you see it as an aberration, in line with what you said, right? Do you see it as an aberration, or do you think there's going to be huge tracing back which is going to happen, and I think organizations will have to restructure themselves to ensure that they are there's a sizable revenue that they start to make, right? To ensure that the confidence is there from the investment fraternity. How do you see that as say an event in
Got
itself?
it.
Yeah.
Ashu, so you've actually posed a bunch of questions here, so I'm going to try and sort of break them down for our viewers, right? One is there a tremendous amount of liquidity? So, okay, there are two parts, right? Primary and secondary markets.
Yeah.
Just for for our listeners, on the primary market side, you're probably doing more of, early stage investments, and all the tech businesses are on the primary side. And listed market is the secondary market, right? Where you can buy and sell shares as a retail participant.
Yeah.
On the secondary market side, of course, there's been a lot of liquidity that has sort of flowed in.
Right.
Not just because of the amount of currency printing that's happened, where every American citizen has got like $3,000 of pure cash in their bank accounts.
Right.
I'm not kidding you. Like if
Right.
you speak to any American citizen, he's got a check with Donald Trump's signature on it. पहला 1750 का था, दूसरा 1250 का था, right? So
Yeah.
I'm like, this is not like a promise check. It actually came. Even people
Right.
saying in India got it, right? So that was the sort of liquidity that got ingested.
Right.
And second was in countries like India, right, where because of the ample liquidity, our interest rates have sort of come down, where your bank today is offering you a fixed deposit at 4.5 or 5% odd.
Right.
So it makes it very, and this is also non-taxed. I mean, this is pre-tax. Post-tax,
Right.
your returns are probably 3.5-4%. So you not even beat inflation if you keep your money in an FD. So people started looking at alternatives, which is why you've seen this massive resurgence of demat accounts. If you look at our demat accounts, they've sort of doubled in the last 1 year.
Right.
Now the problem is that for the informed investor, he's of course capitalized really well, right?
Right.
So if you were a buyer in last March or in early April of last year, you have had it would have taken you great skill set to lose money in the stock market, right? You would have had to be abnormally stupid to
Right.
not make 70 to 75% return,
Right.
right? Anybody who didn't make that, please go back and check your portfolio. You have literally got no brains. Stop
Right.
doing this because you don't
Right.
understand how to do it.
Right.
And that is where comes the second problem, right?
Right.
And I keep bombarding Nitin at Zerodha with screenshots because I'm part of this. I'm a very active Zerodha trader.
Right.
I enjoy my listed markets a lot.
Right.
And I keep telling him that all your Facebook groups, people are just so clueless, dude. They are losing money.
Right.
So if Zerodha has this nudge feature, it's come because of constructive feedback from people like me and so many others who said that Nitin, people are buying random junk stocks because so something like a divan housing at 12 rupees. अरे बहुत सस्ता है. ये 300 का था, अभी 12 रुपए हो गया, बहुत सस्ता है.
Right.
People don't even know how stock prices are arrived at.
Right.
They just buy random junk and then
Right.
lose money.
Right.
So there is a whole set of India which is doing that and losing money,
Right.
trying to make quick money.
Sure.
See, the dichotomy in India, right, is over 220 odd million Indians, blue, white, all collared,
Right.
have sat at home and got salary checks.
Correct.
And those salary checks have only gone in buying FMCG staples. घर पे कपड़ा तो सब लोग वही, everyone's wearing their night suits.
Buying cars, redoing houses.
Redoing houses. So Asian Paints numbers are great. People like me went and bought real estate last year because I was like, boss, kuch nahi kar rahe, let's buy a house.
Right.
So you saw some cities having this massive resurgence of real estate, right? And if you're trying to buy a car, the problem is that today cars are not available for you.
Right.
Because the global semiconductor chain has broken down.
Right.
So all cars are 6 months waiting.
Right.
So there was nothing else that you could do to consume, right? There were no restaurants, there were no holidays. Two really large segments which have got no participation from you.
Right.
Now comes, so this is the 250 million people who built up decent, sizable domestic savings.
Right.
And you go back to this Economist article, right, which speaks about how consumer trends behaved after the Great Plague or after the Spanish flu.
Right.
Where you saw 2 to 3 years of this bullish markets where people were just consuming. There was revenge shopping, right? China also saw the same. Hermes is selling $1.5 million worth of Hermes bags in a day. Because people are like, boss, मैं करूँ क्या अपने पैसे का?
Right.
Right. And then there is a whole other India which has got screwed.
Right.
If I was a trader, if I was a guy selling clothes on the street, if I was a roadside tea stall seller or a bhelpuri wala, if I was in the hospitality industry, if I was in the airline industry, Air India employees are today on a strike because there's a 45% salary cut at Air India.
Right.
So the dichotomy in India or around the world has just grown to a next level, and more so in countries like India, because what happened is that India had a bunch of these small SME, MSME businesses which were running.
Correct.
And they have, sort of fallen off the cliff. They've
collapsed, yes.
Right. So there is no liquidity that's coming there.
Right.
While there is hyper liquidity on this side.
Right.
So where I see when we sort of come back in the regular world, if we ever come back, say in the next 1 year or 2 years, you will have to find a balancing act. Either these guys will be taxed so that some money goes back here, and which is happening, right? When petrol is at 106 rupees, people keep cribbing. But my question is, why the hell are you heading out of home? right? We are in a pandemic. And if you're
Right.
heading, then you should be 106 rupees because the country needs to still run, right?
Right.
GST revenues are not the only thing that can drive a country.
Right.
You have to be taxed somewhere. So if
Right.
it means paying 50 rupees or 45 rupees of tax on a liter of petrol, then so be it. Let
Right.
government of Maharashtra, let government of India make money.
Right.
So
That's an interesting way to look at it, right? But what I meant, Mohit, was and I think this is a brilliant narrative that you've given on on the macros of the country, right? In terms of the liquidity and availability, right? What I meant from liquidity was also the event of very high valuations that have happened, right? There have been startups who've raised the say Series A, and and in a matter of 5-6 months there's been an event of a large Series B which has happened, right? And there has been a massive push, which is or a massive participation that has happened in that area. What are your thoughts about that?
okay, so the economy is like a wheel,
Right.
right? And this wheel runs on grease.
Right.
The grease is the sentiment.
Sure.
Okay, the sentiment that COVID brought initially was fear and oh my God, what's going to happen to the world?
Correct.
So last April, no startup was raising money.
Right.
If you go back to last April, everyone was like, shit, man, we need to go huddle down into our silos. Let's conserve capital. You
Right.
had some of the larger VCs in India sending out emails. We are telling you, please conserve cash. World is coming to an end.
Right.
Shit's going to hit the roof.
Right.
Fire people. Shed all your excess fat. And suddenly, as things started shaping up, people, of course, liquidity came in, but
Right.
there was optimism that came in. Optimism is the grease that
Right.
fuels the economy.
Interesting.
That because people are sitting at home, consumption is going to be higher. Technology is going to be the future.
Right.
Optimism, grease, put more grease into the wheel, right? So
Right.
the grease kept on flowing. The wheel
Right.
keeps on going faster. Sensex moved from 7,000 to 16,000. Grease is
Right.
more. Wheel is
Right.
faster. While that is happening, automatically the next level of grease that has to come will come from the unlisted world,
Right.
because that's the next leg of grease that has to be fueled. Why
Right.
Zomato is so hot today? Because
Right.
Zomato is the next leg of dopamine grease that has to be that is required to be ingested in a market like this.
Right.
If I tell you to buy HDFC Bank at 1,600 rupees at a price to book ratio of 5.7 or 5.9 times,
Right.
you'll be like, boss, you've lost it. I mean, I've factored all the positive that I have. I've done the DCF analysis. Bhaiya, और नहीं दे सकता इसमें valuation. Or if I tell you to give
Right.
Radhakishan Damani, great guy, DMart, beautiful company,
Right.
but at 150 times, what upside do I leave for you? The
Right.
next leg of grease is technology. If you see, around the world, the listed markets with a slight lag effect have also fueled the unlisted markets.
Right.
And the opposite is also is exactly reminiscent. The moment
Right.
the listed markets see a downtrend, within
Right.
3 to 4 months, you'll start seeing the unlisted market also facing downs, also facing liquidity crunch.
Right.
What is happening with crypto right now?
Yeah.
What is happening with the US bond yields
Right.
is a very fair indicative and Fed's stance, right, which is saying that monetary policy we probably might look at increasing rates as early as this year itself, which is why
Right.
the markets have sort of fallen last 2-3 days.
Right.
Keep an eye on that narrative.
Right.
The grease dries out as quickly as it comes.
Right.
The moment it dries off, the wheels stop. They go slower.
Interesting. Interesting. That's a very interesting point that you've highlighted, right? And I think the beauty of these two markets is how independently do they work, right? And while of course one is an extremely where the sentiments are very, very transparent, right? I think disclosures are very, very transparent. There is another market which is kind of opaque, right? But I think the entire narrative of it being the new sort of the new India that is going to get constructed, right, with technology led and innovation, right? And I think how these companies are going to spearhead that, I think that's another narrative, right? And I think that is essentially where the money is going. And like you said, right, there is the money. I mean, there is a sentiment, right? And I think the unpredictability and the dependence on technology, which is still to be proven, right, in terms of adoption and so on and so forth, right? But I think that is essentially where the money is going in. And I think this is just too less for the size that we are. And I think that is possibly that, right? And I think that there is a rationalization when it comes to the valuations that are being asked, right? India is too large a market, right, for the kind of the kind of money which is being poured in, right?
Yeah.
But I'm going to take a step back, right? And I will actually sort of talk a little more about the fund, right? Right, that you have. What are your preferences, right? What are the sectors that you're focusing on? What are the check sizes, right? At what stage do you enter? Tell us a little more about that, please.
Got it. So just coming back on the fund, right?
Sure.
So our fund is basically housed under the ITI umbrella.
Right.
ITI is the full form is Investment Trust of India. I know
Right.
it sounds extremely PSU, but it's not. It's a full stack financial services firm with about 20 odd different businesses, including NBFC, including equity broking, merchant banking, um, and yeah, I mean they have a massive real estate arm, which is we just won the contract for Jayaprakash Associates from the NCLT.
Wow.
They have a long short equity fund, there's a mutual fund, all of that. So I
Right.
run the venture capital piece of it in sort of collaboration with the ITI group.
Right.
Um, I'm, I think by now most of you, most of the listeners would have realized that I sort of, I like to think of myself as a potter, right?
Right.
I like to sort of play with my own clay and develop my own pots, which may be asymmetrical to the world, but are great looking to me.
Right.
And when you're a potter, you have to work early on when the clay is wet.
Right.
You don't
Right.
come on a pre-made pot and just come and do the painting on it and say, "See, I'm a late-stage investor."
Right.
Uh, Sorry, with all due respect to my
Yeah.
late-stage friends, right? It's a lot easier back at your scale versus mine.
Right.
Because we are sort of envisaging what that pot
I
is
agree.
going to look like.
I agree.
So early stage is what we specialize in, is what
Right.
I love to sort of get my hands dirty on.
Sure.
We do check sizes between 100K to 500K for most of our transactions. We're also sort of selectively now creating a discretionary portfolio where we're doing even earlier checks on a no revenue, on a pre-revenue basis, which are more in the 25 to 75K sort of range. But in that, then we have to go through lesser due diligence. So we are just part
Right.
of larger syndicates.
Right. Interesting. And that is a space which is becoming very, very interesting, right? And I'll have to talk to you a little more about that, right? That entire participation.
I don't know about interesting, but that's a space which is definitely so hyper competitive.
It
Uh,
is. It is.
Everyone's sort of gunning for the same space, right?
But Mohit, what has happened is, and when I look at it, right, and there are many people that we're talking to, right, and essentially what is happening is that, even when you're talking to larger funds, right, these are, I mean, everybody wants to bite into the early stage, right, and everybody is literally creating a vehicle or a structure where they're literally participating at infancy, right. So as soon as
Yeah.
the company is born, right, depending on the team, depending on the larger market sensibility, right, everybody's buying into it, right. I mean, of course, the logic is that they want to eventually average it out, right, in case the company goes on to perform much better. But I think everybody's essentially looking at that, right? Why is that, right? I mean, when you are investing in the way you are or you have been, right? There's a certain thesis that you built around it, right? There is a certain, like I said, predictability is very, very important, right? Because there is a certain commitment to the LPs, to the stakeholders. All of that is there, right? What is the rush to create, and especially when it's a hyper competitive environment, right? The valuations at that level are going bizarre, right? What's your thought about that? And why is everybody just jumping into that very, very early stage play?
Okay. We will. I'll answer this again with the current IPO that just happened, right? And Shankar Sharma has actually come out with a great statement today, right? Where he says dividend mutual funds and endowment funds have also participated in the Zomato IPO.
Right.
Now, for a company which makes losses, how does a
Right.
dividend fund justify being invested in the anchor list?
Right.
Great question, right?
Right.
I'm guessing the fund manager there says that I don't want to miss out on a long-term potential opportunity.
Right.
Zomato could be a decacorn, could be a 10 trillion market cap in the
Right.
next 20 years.
Right.
I should be buying in today on day of IPO.
Right.
The same logic goes back to our space,
Right.
right? That because there is liquidity,
Uh-huh.
because my LPs are not asking me stringent questions, because see, in a market where everyone's sort of making money,
Right.
there are no questions being asked.
Right.
When do questions get asked is when you're not making money or when you're not performing.
Mhm.
But when you have a decent stellar portfolio on your core, so say if I promise to my LP that I'm going to be investing in Series B and C companies,
Right.
and I've done a
Right.
decent job in doing that,
Right.
then I can always go back and say, hey, listen, I've been catching good Series B and C companies, but now I think I should even look at my focus on early stage.
Right.
And they're like, yeah, sure, go ahead, do whatever it takes for your business.
Right. Right.
Right? So
Interesting.
that is
Yeah.
exactly what has happened.
Right.
All of this will change the moment your core portfolio stops doing well.
Interesting. But tell me this, right? So, there's a certain herd mentality that you see, right? So, and when you say, that you're setting up an early stage play, many others have done that, right? Where the typical participation size is, from $50,000 about, to about $150,000, right? And this is something that many funds are kind of building, right? They want to be participants in it. But what you see, which is very typical, is that eventually there is a herd mentality, right? You're not a lot of people are taking calls which are into companies of a different kind, right? Eventually, everybody is kind of channelizing money into just about a few industries, right? What are your thoughts
Yeah.
about that? I mean, what are your thoughts about herd mentality?
I think humans are bitten by herd mentality always, right?
Right.
Why do Zara and H&M survive? Because it's herd mentality. Why does Primark survive? Because everyone wants the same at the lowest possible price.
Right.
Uh, that's just a fundamental nature of human beings, that you
Right.
want to follow what your competitor is or what your peer is.
Right.
Um, it's fine when you're doing it for a product, where
Right.
you're buying the same jacket or the same shirt.
Mm-hmm.
It's not too great when you're doing it when you're investing in businesses,
Right.
right? Because herd mentality, you know, is not always the right way to sort of build right businesses.
Mm-hmm.
Because you have oversubscription to a round doesn't necessarily make you a great company or a
Right.
business.
Right.
It could just be because there's high liquidity being there.
Right.
So again, coming back to the whole problem, right? When there is hyper liquidity,
Mm-hmm.
businesses are not built in the same way as they would when they are sort of built with a little more sanity.
Right.
When you build sane businesses, they're slightly,
Right.
more equipped to see, and I keep meeting, there are so many of these young kids, right, working at VCs as associates and analysts.
Right.
Now, most of them have sort of joined the bandwagon between 2015 to 2021,
Right.
right? They've only seen one cycle, which is up cycle, right?
Right.
Whatever they buy is great.
Right.
And they've become thought leaders, right?
Right.
They're talking about how great their investment thesis is and,
Right.
all of that.
Right.
Now, the slightly more mature investor, whether VC or listed or unlisted, right, will
Right.
realize that the party can come to close.
Right.
And you don't want to sort of be shutting down just because the party has come to close. You want to be alive and sustainable at that time. So
Right.
a lot of this Me Too herd mentality businesses will actually fall off when the party.
Right.
And mark my words,
Right.
I'm supremely bullish on the world,
Right.
but I'm supremely pessimistic about the fact that there is a fundamental liquidity problem that the world has today.
Right.
At some point of time, that is going to burst.
Interesting.
It's fine to sort of have your Behti Ganga mein haath dhona, but if you are caught on the wrong side of this,
Right.
you will be evaporated.
I agree. I agree. I like some of the points that you've highlighted, right? I don't necessarily kind of agree with what's happening, and I like the way you put it across. Mohit, tell me a little more about the portfolio, right? You have a bunch of companies there, right? Which are, say, possibly 2 or 3 companies that you're extremely excited about, right? That you think have done exceptionally well in the event that we've been through, right? What are some of those companies, right? How do you see them?
I mean, like I told you, right? After the Banya event, not taken a write-off ever in my life.
Right.
So I'm extremely, I spend equal amount of excitement for all the companies that we have,
Right.
right? Some, yes, have raised more capital, but
Right.
that is just a function of the business that they are in. Like
Right.
RevOS today is one of the country's largest electric vehicle operating system,
Right.
and setting up infrastructure for charging. So
Right.
they've got Chetan Meni on board, they've got Prime Ventures, and now they've got a large US fund which has come on
Right.
board. So अभी चार्जिंग इंफ्रास्ट्रक्चर आपको बनाना है इस देश में, तो पैसा तो लगता है, तो उससे ज्यादा रेज किया है, but that doesn't
Right.
make him a better or a differentiated entrepreneur.
Absolutely. I
He's a
understand.
good entrepreneur,
Right.
right? Just that he's raised more money.
Right.
And yes, on a fund level, we've sort of done a 15x on that versus doing,
Right.
say, 2, 3, 4x on Hubhopper and the others.
Right.
But all are alike. What I like about each of these founders is that they have sort of figured it out,
Right.
on how to so we gave out the sounding bells on COVID early in March
Right.
itself. I was personally affected with COVID in May of last year. So I
Right.
told them that, hey, listen, it's bad, but it's not that bad.
Right.
You'll also have to start sort of learning to live with it.
Right.
I think world is going to come back to normal and then again sort of go back into it. And I'm 100% sure we'll have a third wave also,
Right.
right? Because the way we are sort of consuming. But I think everyone's sort of navigating around it and sort of weathered the storm. One business which sort of, I think, and it's more important to talk about your losses or talk about the ones which are not performing versus the ones
Right.
which are performing. The ones which are performing will any which way continue doing that.
Right.
But like one of the companies in our portfolio was, of course, discretionary FMCG products, so didn't really do well in the
Right.
in the COVID time.
Uh-huh.
But curtailed the losses, curtailed the spends that were on a monthly basis, brought in great people on board today,
Right.
and is again sort of restarting and rejigging its entire go-to-market strategy. And that is really, I mean, my last 1 week has just been sort of spending time with the founder and with the
Right.
new team, telling them that, listen, shutting down this business is the easiest thing that we can all do,
Right.
right? But in this D2C world today, where there is so much hyper liquidity,
Right.
तुम थोड़ा सा ये कर लोगे तो कोई ना कोई आ ही जाएगा who will buy
Right.
into it,
Interesting.
right? And
Interesting.
it'll be for me, I tell founders this all the time, right? That it's one life.
Right.
The value of that 100% equity that you start off with will substantially grow if you are able to build something the right way, and that's the only way you'll make money. You'll make good money.
Right.
You look at the top 100 billionaires of the world.
Right.
None of them got there by getting salaries.
Right. Interesting.
So,
But I
forget the
think
salary part.
I think it was a wrong question, right? I think asking a father, right, which is a better kid, I think is an unfair question, right? And I understand that, right? While of course, you choose to be clinical, and I think that's part of the job, right? I think, but you get associated and attached with those companies in a certain form and way, right? I think that's what being human is about, right? Mohit, there's one thing which is very interesting that has happened, right? So last few has been very, very interesting in terms of the kind of founders who've been coming in, kind of raising capital, right? It's a far more mature set of people, right? I think the aspirations kind of changed, right? People earlier, who were looking for who were kind of under, say, compulsion, right? And that could be a family compulsion, that could be a social compulsion, right? And essentially kind of took up jobs, right? Are now people who work 10, 12 years, 13 years, 14 years, 15 years, maybe more, right? In the industry, and, kind of chosen to sort of step out, right? And they want to sort of now be a participant to the growth story that India is going to be, the narrative that is getting sort of, that we are in, right? And the position that we are in, right? This is a very, very interesting play, right? What are your thoughts about it, right? Has it become easier for you in that sense? I mean, you've been there long enough, right? You've invested in a company, right? Which came with, you started with a company, which had experience.
Average age of founders was 55.
Correct. So, what's your sense of it, right? How do you see that, right? Are we, do you think? Of course, we've spoken about liquidity, we've spoken about a lot of other, systemic issues, right? But do you think, and I personally believe that founder and is the common constant, right, across a winning business, right? What are your thoughts about that, right? How has that improved, your life as the fund manager, right, as the leader who's taking a call and investing in the possibly unknown, right? A reasonable percentage of it, right? So how has that changed?
Ashu, I'm going to ask you a question. Do
Sure.
you like whiskey?
I'm a more beer person, but yeah, I mean, I don't mind.
Beer person? Okay, I'm a hardcore whiskey lover, right?
Right.
And the older, the better.
Right.
In the whiskey world, the older, the better. I use the same logic in investing. The
Right.
older, the better.
Right.
Right. The more aged, the more flavor, the more aroma. Right. The more experience, the more learnings.
Right.
The more drive and dedication towards business.
Interesting.
That said, I mean, I'm also an enthusiast of new whiskeys. Right. So when Japan launches a new whiskey, I'm one of the first one to jump onto that bandwagon.
Right.
What I don't like is IMFL, Indian made foreign liquor.
Right.
What does that mean?
I don't like.
So Indian made foreign liquor is basically, you import kegs from outside and you sort of blend it and make shit out of India, which is for the masses.
Right.
So I don't like Me Too. I don't like, herd mentality wala companies where founder is also mediocre, business is also mediocre, everything is mediocre, and investor is also mediocre.
Right.
So either you do new cutting edge whiskeys which are going to change the world in the future, or you do the old whiskeys, which can also change which will sort of mature and age gracefully.
Right.
The IMFL is what you stay away from.
Right. Interesting. But one thing which I like across your conversation, right, is how clearly you're putting it, right. But I think one complexity that is there, right, is that India, we operated many layers, right, and there's a lot of regionality, right, and there could be a founding team which, so for example, says operated in a Hyderabad or in Bangalore or say down south Mysore, right, and there is a founder who's operated say in Haryana, right, and it's a very different perspective that you come up with. It's a very different value system that you come up with. It's a very different way you visualize many things, right? And I mean, they could both be experienced founders, right? They could have their own versions of looking at it, right? Doesn't that make it complicated, right? Because the team fits the bill, experience fits the bill, larger thesis fits the bill, but the visualization makes the difference, right? How do you see that? How do you dissect that?
No, I mean, I think you've hit the nail on the head, right? Great question. that I mean, people may think that the geographical sort of diversity doesn't make a difference. It
Right.
definitely makes a lot of difference.
Sure.
Um, I wouldn't want to sort of say that this is what I have learned or I've seen,
Right.
but in people in North India are slightly more entrepreneurial bent, right? Their ability to sort of vision, to see the larger picture and see a deeper, bigger vision is
Right.
far higher than the ability of the Southern India experienced founders
Right.
or people who come from industry, right? So
Right.
you have you say a great founding team who's been ex Infosys.
Right.
Abhi, the fact is, I actually judge you for being in Infosys for 15 years
Right.
because who wants to be in Infosys for 15 years, right?
Right.
Even
Right.
Narayan Murthy didn't want to be there for 20 years.
I,
Modern Mohandas Pai
I,
want to be there. So while
right.
a guy who's sort of come with 10 years of experience at Maruti,
Right.
he's and worked at the Manesar plant, he's a
Right.
very different beast altogether.
Right.
Right? He's seen scale. He's seen a company which has grown leaps and bounds, and he's even more excited about what else can he do. Classic
Right.
case, Jagdish Khattar, may he rest in peace.
Right.
He headed Maruti. He understood what is the pain point in the second-hand industry, in the
Right.
in basically the repair and service and maintenance part,
Right.
and created Car Nation. Of course,
Right.
he had his own learnings, he had his own mistakes. Basically, Car Nation is what Go Mechanic today is.
Right.
But in Car Nation's time, there was no capital available the way Go Mechanic has today.
Right.
Right. So I think, my personal belief is that North India, this whole belt of, right from Rajasthan,
Right.
UP, Punjab, Haryana, Delhi, Jammu and Kashmir, hopefully in the
Right.
future, all of that belt has a lot more ambition to sort of look at the bigger picture.
Right.
While Southern India is still sort of, caught in the organizational hierarchies that they were in, and there's a little bit of schizophrenia in the way they're looking at envisaging businesses.
Right.
Right? Why the whole Bansal clan now? So today, a lot of North India has actually descended down to South India, right?
Right.
Because of lack of talent of tech and all in the north of the country. But again, you still have to see much larger practices coming out from there.
Interesting. And I think that's a difficult one, right? I think that's a very, very.
That's a difficult one. Yeah. That's because see, in Chennai, then you've got the whole Zoho clan, right? They are of
Right.
course great visionaries.
Right.
I wouldn't want to paint them with the same picture.
Right.
But I mean, broadly, I'm just giving a very sort of a crude way of breaking it down.
No, I understand. I think it's not it's not an easy one, right? I don't think it's easy for anybody who's operating in India, right? I think you're then, of course, trying to sort of, kind of visualize that team in a market play that, you can, and I think the thesis that you've built around that particular investment, right? And I think that becomes important. Mohit, what's your sense of Bharat, right? I think there's a huge narrative, and we've touched upon that, right? I think COVID is kind of open. I mean, I think it was pre-COVID, right? Geo came in, and I think adoption happened phenomenally, right? While of course there are nuances to it, right? There are positives and there are negatives, right? But what has happened is that there have been platforms like TikTok, Musically, a lot of Indian platforms like say Chingari, Nojoto, and many others, right? And this is an audience which has just kind of taken it over, right? They're creating a lot of content. They're getting exposed to a lot of new content. The arbitrage that existed between a market A and a market B, right? I think it's kind of diminishing, at least at an exposure level, right? How do you visualize that as an opportunity, right? I mean, how big do you think this is going to become? I mean, and when I do that, and this I would want to highlight that the savings rate is of course is kind of is literally non-existent, right? These are people who are still dependent on a lot of government support subsidies, right? A lot of that liquidity getting injected in that ecosystem at that layer and all that, right? So there are those complexities, right? Which are kind of while there's an aspiration on one hand, it kind of taper down the possibility of consumption, right? How did you see that, right? As somebody who's been an active, watcher of macros, of secondary markets, and the entire consumption boom, how do you see Bharat as an opportunity playing out?
Okay, so I'm actually going to do a little China comparative here, right? Just to sort of, because I think India is, whether we like it or not, we are sort of shadowing the way China has sort of gotten built.
Right.
China, from the 90s, when China sort of had their great industrial revolution, right? China basically knew that, okay, we have a population growth of 7-8%. Right. We'll control that and bring it down to 5-6% by keeping the one-child policy. But despite that, we'll have, like, they had granular level data work that they've done with regards to what is going to be the addressable population that will require jobs.
Right.
Okay. They created those jobs. Then came the internet, and then came people flooding to the internet and buying and consuming, creating content, and then buying content using, the created content, right? Like you have a bunch of these social commerce platforms.
Right.
The fact of the matter is, as much as I'm bullish in the social commerce platform, right? In India, we forgot the job creation part. We
Right.
first got the internet, then we got the content,
Right.
but we forgot the job. तो
Right.
भैया सोशल कॉमर्स में कॉमर्स वाला पार्ट कैसे होएगा?
Right.
सोशल
Exactly,
हो
my
गया,
point. Right.
इंटरनेट आ गया, कंटेंट भी बन गया,
Right.
पर खरीद कौन रहा है?
Hmm.
Right? And in order for you to sort of see, on an average for all social platforms that India has, social commerce platforms that India has, you need an average Indian to at least transact for between 500 to 750 rupees a year once.
Right.
We are nowhere near that.
Mm-hmm.
So then the bigger question that has to be begged to be answered here is that the next leg of India's population cannot depend on Narega and all these subsidiaries that we've been giving them. Right? This government does not only stand for that. They are standing for wanting to build a better country which is prosperous. And if you have to go to the 5 or 10 trillion economy, you basically need to have a massive industrial revolution altogether.
Right.
You need to have like mega large factories coming in and employment which has to come back.
Right.
And that employment can't just be agri, right? Where बारिश आएगा क्या, monsoon कैसा है, that is not employment, right? I mean, yes, agri plays an important role, but most of these young kids don't want to do agriculture.
Right.
So find them employment which is meaningful to them, and difference of numbers flowing into these commerce platforms.
Right.
I love the content that India is building out, but just the content is not going to be good enough.
Right.
People transacting it. If I'm working with, say, brands on the content, Ashu, you can hear me, right?
I can, yes.
Yeah. So if I'm working with brands while showing the content, for brands to advertise, you need to showcase numbers.
I agree.
Right? Why would a lever spend money in advertising its products if it knows that, okay, surf is never going to be sold in rural India?
Right.
Right? If they will continue to consume ghadi detergent or probably even put tuna on top, I mean, there's no way I'm going to be able to sell Surf Excel.
Right.
But then I have Rin over there. So I think Jio is doing a decent job in bringing the internet, or even Airtel is doing a great job in bringing internet to people. But now we need to all sort of take a conscious call back and figure out a mechanism to find employment.
Right.
This country needs more employment.
Right. That's a very interesting point that you highlighted, Mohit. Mohit, how I wish that we could go on to sort of talk, right? I think this has been an absolutely smashing and very, very interesting conversation, right? Usually when we have a conversation, it's more about that particular sector, and you kind of go down deep dissecting that sector, right? And you try and sort of cover nuances, right? But I think what is to be understood, especially when you're talking about a country like India and an opportunity like India, what is to be understood is the macros that are very, very significant, right? And I think they're going to continue to dominate whatever investment that you make, right? And whether we agree to it or not, right? If we are a complex nation, right? We are a very, very complex economy, right? Where demand is difficult to predict, right? Last question, Mohit. In a very, very interesting conversation, right? What will be your advice to startups, right? Given we are now kind of energized in a very different way, given we're in a very, very dynamic environment, what will be your, say, top or two or three advices, your points, right, for founders who are working right now, who are building right now, and focused on India market, right? What will be that?
See, for the ones who've raised large rounds, I have no advice because I think they are smarter than you and I are, and they'll find their own way and journey in life. I think one advice which, and I've been sort of a proponent of that, is JOMO,
right?
Which is the joy of missing out, right?
Right.
So because what is happening is, for every one startup which is hyper funded, there are 99 which are sort of missing out, who are looking and saying that, what they're sort of in an existential crisis.
Right.
We're not able to raise money. Our families judge us because we are not able to raise money now because, right, everything is now on news and, when XYZ and all of that is happening.
Right.
If you are in a business which makes sense, please stay at it. Do not get annoyed by the fact that you're not finding capital from institutional investors.
Right.
Right. Find the joy in missing out sometimes.
Right.
It's okay to be mediocre. Not everyone's going to be hyper funded. Not everyone's going to become a unicorn.
Right.
And that's fine because if everyone starts getting to that scale, then there's a bigger problem that we'll have at hand. And if you guys stop, pursuing your entrepreneurial journey and your dreams, your teams will get demotivated, and
Right.
in turn, it's going to be a complete loss or breakage of a dream and an idea.
Right.
So yes, there is a higher lure of fatter salaries at some of the hyper funded startups. If your heart really wants that, then do it.
Right.
But if you don't want to be a slave, if you don't want to sort of let go of your entrepreneurial dreams and ambitions, stay at it. Every one of us has a certain script in our lives.
Right.
Believe in that script, and at the opportune time, the script will play its course.
Interesting.
That's my biggest sort of advice to all startups. I feel very bad each time, I see startup entrepreneurs sort of looking at exit options in terms of, yaar, abhi nahi ho raha hai, so I'll take a
Right.
job at Zomato, or I'll take a job at Flipkart or at Amazon.
Right.
It's the ultimate sort of pain point to see people decimate their dreams and going in partnering with
Right.
jobs like these.
Right.
So yeah, that's my
Interesting.
only advice, right? I mean, for the bigger ones, just
Be
bring
at
in
it.
some yeah, on the bigger one, just one last piece, right? Is
Sure.
just bring in some rationality with regards to your hiring strategy, right? It's crazy. It's crazy.
Right.
I was reading about Bharat Pay offering BMW bikes work from Dubai.
Right.
I mean, what's happening there?
I think we've entered a very, very interesting phase, right? I think we're trying to build a very different kind of a narrative, right?
Yeah.
And I think I'll abstain from making a comment. I think a specific comment, but I think
Ashu, you are basically being diplomatic, politically correct, while you're going to get me hounded on all social platforms for my comments.
no, absolutely not. No, but I think I kind of agree with a lot of points that you've highlighted. But I understand where you're coming from, right? I think there is a certain rationalization that needs to come in, right? I am not, for example, I question, the hyper, participation which we kind of entered, right? It is going to make things very, very difficult, right? I am particularly worried about the fact that engineers today are there's a bizarre expectation that they have in terms of say salaries and and all of that, right? Which is going to make it very, very difficult for many other companies to kind of build themselves, develop, grow, all of that, right? So I think there are a lot of those disadvantages that are there, right? While many companies are looking at it as a moat, there are some very, very key teething troubles that we will face, and not very far from now, right?
Yeah.
It is becoming very difficult in that sense, right? I think there is a certain sensibility that has to step in, right? But like I said, like I believe, I think this is 2020 has been a very unreal year, right? I think it's brought in a very different kind of visibility to India. It's kind of also pushed us to being a little more homogeneous, right? Given that everybody's consuming from the same screen and same environment and all that, right? And I think arbitrage between market A and market B is kind of reduced, right? It's just a
Yeah.
function of capital, right? And availability of capital is going to make it much faster. Consumption hopefully will grow. I think businesses will start to perform much better. I think that entire the only I think if that can be made a little more seamless at a policy level, where that interaction can happen a lot more seamlessly, I think that could really fast track this entire pace that we've always aspired to be on, right? The growth possibilities that we've always looked at, right? So I think those are some of the key aspects. But I think both of us agree, right? We are a large economy, right? We are a complex economy. It's not as easy. There are many stakeholders to it, and we
Yeah.
operate at many layers, right? So it's a difficult one. But I think hopefully we're getting at that. I think we have the right leadership in place. They're trying to sort of tackle it. Unfortunately for
Yeah.
them, they've been plagued with many challenges themselves, right? And they have to reprioritize in a very, very short while, right? So, but I think with that, I think all of us are hopeful, right? And I think that's something which is common to all Indians, right? We are resilient, we're hopeful.
Yeah.
Mohit, it was a pleasure to have you. Thank you so much for taking the time out. I had a lovely session, and I look forward to having you with us soon, discussing some very, very key areas, right? And what's happening in those areas, right? Thank you so much for taking the time out.
Thank you so much, Ashu, and I look forward to being back here, provided I don't get hounded and trolled on social media after this one.
No, you will
If that
not.
happens, then I'm going to only do non-recorded events with you.
No, you will not. You will not. Mohit, thank you so much.